B. You don't need a sneaky accountant to lower your tax bill. You need to stop missing the legal write-offs you already qualify for. Here they are. A write-off isn't a loophole. It's just a normal business expense that lowers the income you get taxed on. Today, what actually counts, the write-offs freelancers miss most, 3 you should never claim, and how to track them so tax time is painless. That never claim list is where people get themselves in trouble. Make sure you hear it. For an expense to be deductible, it generally has to be ordinary and necessary for your business, something a normal person in your line of work would reasonably spend on. If it genuinely helps you do the work, it's usually fair game. If it's personal, it's not. A designer's software subscription? Ordinary and necessary, deductible. That designer's Netflix? Personal, not deductible, no matter how you spin it. Assuming nothing counts because you're just a freelancer. You're a business, and businesses get to deduct their real costs. The commonly missed ones: a business use portion of your phone and internet, software and subscriptions, professional education and courses, business mileage, payment processing and bank fees, and a home office deduction if you have a space used regularly and only for work. You drive to client meetings, pay for design tools, took an online course, and use a corner of your home only for work. Tracked properly, those can add up to thousands off your taxable income over a year. Skipping small recurring expenses because they don't seem worth it. A $30 subscription times 12 months times several tools is real money you're not deducting. 3 traps. 1. 100% of a car or phone you also use personally. Only the business portion counts. 2. Meals that aren't genuinely business related. A solo lunch isn't a write-off. 3. Clothing you could wear in everyday life, even if you bought it for work. Claiming these is how you invite an audit. You use your car's 60% for business. You can claim that 60%, not the whole thing. Writing off 100% is the kind of round number that gets a second look. Treating write-off like free money and stretching it. The goal is to claim everything you legitimately can and nothing you can't. Aggressive nonsense costs more than it saves. 2 habits. Run business expenses through a separate business account so they're all in one place. And snap a photo of receipts into one folder or app as you go. Then at tax time everything's already sorted, no shoebox panic. Every business purchase on the business card, every receipt photographed the moment you get it. At tax time you export one tidy list instead of reconstructing a year from memory, mixing business and personal spending and trying to untangle it in April. You'll miss deductions and pull your hair out. Separate now. So, a write-off is just a real business cost. You're probably missing phone, software, mileage, and home office deductions. You never claim the personal stuff dressed as business, and you track it with a separate account and photographed receipts. Do this and you'll stop overpaying the IRS, legally and confidently. Grab the free freelancer deduction checklist in the description. And subscribe. There's a new no jargon money video every week to help you keep more of what you make.